Friends, Weeks Exchange has come up with an exclusive reward for Bitcoingem community where you can sign up and claim up to $10,000 in reward depending on your trading volume. So you can deposit $100 and get 40 USDT back. So there are different rewards depending on the trading volume. If you're looking for a non-KYC exchange, then this is an exchange that you can look for. And to use, there is no harm in depositing 100 $200 and to use this benefit that they are offering to our community. Along with crypto, you can trade tokenized stocks as well as gold and silver. So there are a lot of trading assets available depending on which asset do you want to trade. So this is an opportunity. Again, this is not a promotion of this exchange. I have also deposited a small amount and I am trading with my own money on this exchange to see how it is. But if you're looking for a non-KYC exchange and if there are some rewards to be claimed, then I don't see as any harm. So if you want to do sign up using our link and use this benefit. Friends, welcome back to the Daily Setup Show. So in the first segment, the macro anchor, today we are going to look at US 2-year bonds. Yesterday we had an analysis of DXY chart, and today we are going to look at US 2-year bonds. So US 2-year made a massive breakout in 2021, and finally it went to as high as 5.3, 5.4%. And since then, there was kind of a consolidation and correction. So it was in a downtrend, which led to a rally in all the risk on assets since 2023. This is where it topped, and this is somewhere where risk on assets started rallying. So, what 2-year bond represents is what market expects the Fed interest rate in the short term. So, this is very important indicator, and you can see there is a small breakout since February 2026, and this is inching higher or trending higher. So as long as this trends higher, there will be a pressure on risk on assets because this is in a way if funds are getting 4, 5, 6%, let's say interest rate, safe returns in government bonds, then they tend to park a huge sum of money over there because that is a risk-free return. So liquidity drains if bonds keep trending higher. So this is something to keep an eye on because let's say if it goes back to this 5.25% rate, then that is almost a 1% pump. And rather than rate cuts, that indicates that there will be rate hikes, which market will have to price in. So this is something to keep an eye on in the macro anchor. So in today's trading setups, the first trade opportunity can be from hype. Hype is currently in this downward channel, so and it has hit support. So the first support is exactly at around $60 region. So the first trading opportunity can be a long from here with target of 64, 65. But the overall momentum is bearish in my opinion as long as it stays below this region of 69 to $70. So if you are looking to long, it is currently at support. You can see the 4-hour torch has also resetted itself and it is at its lowest 4-hour RSI. So an upward bounce, technical bounce is more likely over here. But overall, as long as we don't reclaim this 68, $69 region, I see it eventually going lower. So either go for a long year, but a high conviction long can only come once it breaks out of this zone, starts consolidating above 68, $69 region, and it might again go for a retest of all-time high or create a new all-time high. So this is a long scenario. If you're looking to short, then there are again two opportunities in my opinion. First opportunity would be wait for a bounce. If it bounces to this region of 65, 66, or let's say even if it goes to 68, $69 region, and you can see some rejection because this is an important zone. So if there is a rejection over here, you can look for short. Your target would be $60, target one, and target two would be another leg down to $52, $53 region. Or the second shorting opportunity can be if it loses this zone of support and if it starts consolidating before below 60, then that's your target where your target price would be 50 to $53 region. So that is the short term trading opportunity on hype. There is a one more opportunity which can be presented in terms of trading on near. So near has broken out of this bear flag. This was a bear flag and it has broken out, and it is also currently in this downtrend. So technically, if you make a case of bear flag, then the target would be almost at $1 region. But I am not that greedy. But there is a good shorting opportunity. If there is, let's say, some bounce over here near the $2 region, then you can take a short where your target would be this zone of 1.6 to 1.4. So this is a good 30-40% move that you can capture. If you want to long, then it needs to break out of this downtrend, reclaim this zone of $2.2 region. If it reclaims this zone of $2.2 region, only then is a long trigger where your target price would be again, it goes to retest these highs at 2.5 to $3 region. Okay. If you're longing 2.2, your target one would be 2.6, your target two would be $3 region. Again, this is not any long-term call on near. This is just simply trading what market gives. So there are two trading opportunities. If you're looking to short, a bounce near $2 region would be your short trigger where your target can be 1.6 to 1.4. Your stop loss is a clean acceptance about 2.2. And if you're looking to long, wait for it to break out and consolidate about this $2.2 region, and then you can target 2.6 and $3 region. So these are two trading opportunities, one on high, one on near. Yesterday, I gave you trading on Apple as well as SpaceX stock, and both are exactly doing well. So the third chart for today, we look at QQQ, which is a Nasdaq tokenized ETF. Now this is, we're looking at a daily chart and it is clearly making a double top with a bearish divergence. So if you look at the RSI is making a bearish divergence and there is a double top. So this is likely a top scenario. It has currently approached this support of around 715, and if this support holds, you can expect one more bounce, and this time the bounce can be lower before falling down. So this is one possibility. The next possibility is losing this support and then going for the retest. Overall, as long as it is holding this 690 to $700 region, you can make a case of a range bound market also. So for it to correct hard, it needs to lose this $690 region as support, and then you can expect a huge correction because this is literally air. There is no major support. The next support directly comes at around 630. So either it goes sideways or either it breaks down. Technically, if this is a double top scenario and if it needs to break below 690 to confirm this as a double top. Otherwise, it can stay range bound and again go for a next leg up. So 690, as long as that's holding, the overall, bulls do have a hope. If it loses 690, then it confirms this double top and then you can expect a huge correction. So currently, if you're looking to trade this QQQ, then you can either wait for a bounce and short it, or if you want, you can long here. Overall, in my opinion, there is a risk of double top because DXY is going higher, US 2-year bonds are going higher. So I would be in favor of shorts rather than long. I would not short here. So I would either wait for bounce or I would either wait for it to go lower, come back, retest this zone as resistance, and that would be a short trigger where take profit would be 690. And again, if it has to go lower, I would wait for it to prove that. So I wouldn't jump into that trade. This is where I will take profit. And if yes, there is a leg lower, then the charts need to tell us that. So this is QQQ. There is a risk scenario of it doing a double top. So keep that in mind when you are buying any risk on assets.